So one of the first steps is really looking and understanding the financial data and the fundamental data that sort of you need to do that creditworthiness assessment. So you could be dealing with multiple subsidiaries in multiple countries, currencies, and and then the reporting standards may be slightly different as well. So it's really understanding which data items do I need to use. How do I translate that so it's like an apples for apples basis? So the way that we look at the data at S&P Global is that all of the information we get is we standardize that data, so you can do that comparison. It isn't apples for apples across all of the different reportings or the different regulations. So once that's probably a key thing that they need to do. The other thing is really when they need to look at the interest rate attributed to the loan, how do they do that? How do they get that information? So we have our corporate yield curves, which looks at market information that then creates these benchmark curves based on the rating, based on the sector, and based on currency. So you can see the values and the credit spreads for those particular sectors. The key to it all, though, is really the transparency. So when you need to go to tax authorities or you're talking to auditors, you need to justify the values that you're using. So we provide all of the underlying bond information that's gone to generate the curves, provide the detailed methodology so people are comfortable on how they're constructed, provide other metrics like number of issues, number of issuers, so they can see the depth of information they've got. So that becomes, clients become a lot more comfortable with the values that they're using, and tax authorities and auditors can really see where the value has come from. One of the main issues we're seeing is understanding the creditworthiness of the subsidiaries for intercompany financing. So, and the implicit support structure. So, are there parental supports? Is there government supports? How do I assess the creditworthiness of that particular subsidiary? And then from that, how do I benchmark and find the value for that given loan? So, what we have at S&P Global is we have credit models which allow people to do that analysis for the creditworthiness, which is particularly important for unrated companies to assess that creditworthiness. And we also have developed some corporate yield curves, which allows clients to then benchmark against the rating or the score in the sector to understand what sort of value they need to put on that loan. Yeah, I think the main implication there is cost. I think that and the other thing is that the system's not talking to each other. Okay, so they might be written in different languages. They have different databases that don't talk to each other. So the way that we've got different delivery mechanisms that we can provide our data over, and they're pretty simple to integrate. So we have a desktop, so everything's done on a front end, so the clients can use that and see the information, and then that flows through into our Excel plugin. Where we have templates and an API. So that really does help clients when there's not much integration needed. It's very, very simple, because what I've been seeing is a lot of people do all of their work in Excel. And we also have a team of modelers as well who can help our clients with looking at their Excel and then maybe writing and adding to those workflow templates to make it a lot easier for them.